Welcome back. Today we're going to talk about why good people get denied. So I had a client, she made $140,000, great credit, good work history. And the reason why she got denied wasn't because she just didn't have the right financials. It was of something she did 3 weeks before we closed. Now, when it comes to great credit and doing all the things, you don't really expect for you to get a denial letter. And that's exactly what happened. So the reality is I want to make sure that this doesn't happen to you. And we're going to talk a little bit about it so that at the end of this video, you know exactly what you need to do to stay on the right side of it so that you get keys instead of a denial letter. So let's get into the tea. Well, she went on ahead. We did all the things. We got pre-approved, we talked about the strategy, we went into the conversation about how to build legacy wealth. And guess what? She had all the right things. Good job history, she was a teacher, she made good money. Additionally, she had an 800 credit score, not a lot of debt. So she was the perfect candidate for purchasing a home. We get her pre-approved, she picks the house, gets under contract, picks even the paint colors at this point. And guess what? Right before we end up getting her loan docs out, we get a little notification. And then I have to have a very difficult conversation with her. And that notification was, and mind you, before we did the pre-approval process, we went through all the no-nos. We went through the no-no of don't quit your job. We went through the no-no of don't get more credit. Don't apply for more things, right? That you're going to own. Let the furniture be afterwards. Let the sales happen. Don't get the new credit cards. Don't go ahead and put large deposits into your account. So she did all the things. She was like, okay, Victoria, I'm going to listen to you and I'm going to do it. So she did. Well, come to find out that she ends up, we pull the credit report. So most lenders pull your credit to make sure both your credit and your employment history is the way that we did it, if not better than when we first issued the pre-approval. And sure enough, guess what pops up? Not just a credit inquiry for a car, but also a new trade line for the car. And so what ends up happening, I asked her about it. I said, hey, what happened here? Like, did we get a new car? What was the deal? And she says, no, I didn't get a new car. I ended up co-signing for my sister. And she's like, so Victoria, I didn't get a new car. I'm not making the payments. And unfortunately, because it's a new credit, it's a new trade line, that impacted, because at the end of the day, even if you co-sign, you are still responsible for that debt. They will include that as a part of your debt to income ratio. And so unfortunately, in this scenario where she thought she did nothing wrong, I followed all the rules, it ended up costing her the opportunity to purchase a home. So fast forward, we had to cancel the contract, we had to get her deposit back. But at the end of the day, we had to re-strategize the entire game plan. And she, instead of doing her key shopping and home shopping and all the things, she ended up having to wait a year because it was that we had to show that her actual sister was making the payments for that car in order for us to omit that debt. So we could go ahead and say it wasn't hers and have the proof. And that's 12 months of that we needed it. So we had to put a pause. Fast forward, good news, we ended up getting her the home, but it took about a year, and that was a year of her paying rent where she could have paid for herself due to just a mistake or trying to help someone out and doing a good thing. So one thing I want to make sure that you guys don't do is keep in mind, lenders will check the credit even after you've been pre-approved, and they will do it right either before your loan docs, right at funding. So you don't want to be caught in the midst of it by co-signing for somebody or Memorial Day weekend and you want to take advantage of that 10% sale at the department store because you want to get the furniture, right? Or you want to buy that engagement ring. Wait till you have the keys, then you can do all the things, right? But for right now, when you are in that home buying process, you want to stay in financial jail so that way you don't have to worry about not getting the keys and maybe not getting the home. And so I really want to encourage everybody that you could do all the things right, but just keep in mind these tips that are super duper important to avoiding you from having the same mistake in the long run. And I will leave you guys with this. One of the things is that you can empower yourself is keeping an eye on your credit report. So there are resources like annualcreditreport.com where you can go ahead and actually look at the report for free once a year through all 3 credit bureaus: Equifax, TransUnion, Experian. The other thing you can do is also use credit monitoring tools like Credit Karma, which is completely free. Credit card companies also offer credit monitoring services that you can also use for free too. And so make sure that things aren't popping up on your credit. Make sure that a medical collection that you thought went away, or maybe a debt you had in college that you thought, well, I never heard about it. I never, got the mail, or I moved and I don't know what happened to that debt, because it does happen from time to time. That you guys take a look at your credit report, look at that, make sure there aren't any inaccuracies, and that's the time that you want to do it. So with that, I'm going to leave you with this. Make sure you check your credit. Make sure you follow the rules for those 60 days. Don't make any large deposits that could be questionable because that a bank can't source. Don't quit your job. And if you do, it's for more money, not less money. And you have to have an offer letter in that process so that the lender can make sure that you actually have the financial responsibility to take on the mortgage. Also, don't open any new credit cards. Don't co-sign for anybody. If you learned, I know she had the best intention and she wanted to help her sister, but she needed to help herself first. So with that, we'll see you guys on the next one, and stay tuned for more details. If you want more tips on how to build generational wealth, real estate, and wealth planning, and just maybe some hacks that'll help you in the future, make sure you hit that like and subscribe button so you don't miss out.